Picture this. It's 11 p.m. on a Tuesday. You've somehow fallen completely down a rabbit hole watching some guy with a Lamborghini in his thumbnail talk about pips, spreads, and the micro movements of currency pricing. You definitely don't understand half of it, but, well, by 2 a.m., you've opened a demo account anyway. It honestly feels like a secret you're not supposed to have yet. The interface is completely confusing. Red and green candles everywhere, numbers jumping around, but you figure it out just fast enough to hit buy on the euro to US dollar pair. The chart moves, something just clicks in your brain and you think, that's money. You close it out. You just made $12 in 4 minutes. Your hands are a little warm. And as you sit back and look at that screen, a very dangerous thought crosses your mind. Why doesn't everyone do this?
Okay, let's dive right into this. Welcome to this explainer. Today we are breaking down a brutal, beautiful, and highly structured professional evolution. We're tracking the complete journey from that intoxicating first $12 demo win all the way to becoming an apex fund architect managing $22 million. And look, this isn't just about stacking capital. It's an 8-level roadmap of profound psychological transformation, shifting core competencies, and operational scaling. We're going to look at the stark reality of what it actually takes to survive and scale in these markets.
Here is the roadmap we are about to explore. The illusion of quick wealth, finding the quiet technical edge, building the operational machine, and finally, the apex manager mindset.
Starting off with Phase 1, the illusion of quick wealth, which covers levels 1 and 2. This is where high excitement slams right into harsh reality. So after that initial demo win, you basically consume everything. You find a strategy on some forum claiming an 87% win rate, you print out the screenshot, and you deposit a real $500. You see a pattern, you buy the British pound against the US dollar, and boom, it immediately goes against you. But hey, the guy in the video said to be patient, right? So you hold. 40 minutes later, you're down $80, you close the trade because you just can't stomach seeing the red number anymore, and you sit there frozen. And this brings us right to the great trap of level 2. There is a massive, massive gap between theory and execution. You believe your problem is just a lack of knowledge. So in theory, you learn all the right things. You build a pristine Google Doc trading plan, you buy a $97 course, you promise yourself you'll only risk 1 to 2%, but in actual execution, day 5 rolls around, you see a setup that isn't even in your plan, you impulse risk 5%, and you blow it in exactly 22 minutes. You end up in these Discord servers with 4,000 members, blindly chasing some random guy's daily bias. He's right 55% of the time, the market is purely random 50% of the time, and you genuinely cannot tell the difference. You think your psychology is broken, but really, you're just trading patterns that don't have a real statistical edge.
Moving right along to Phase 2, finding the quiet technical edge, mapping out levels 3 and 4. Right around month 10, the hunt for the Holy Grail finally stops. You transition from trying to predict the market to just observing its behavior. The reality of a true trading edge is, frankly, incredibly unglamorous. You strip absolutely everything down to a tiny, boring framework. We are talking one specific session, rigidly defined risk parameters, and just endless manual backtesting logs in a spreadsheet. There are no Lamborghinis here at all. You realize your win rate is only 55 to 58% with a 1 to 1.5 risk-to-reward ratio, but suddenly, you have a consistent 6% monthly return. You learn that the absolute hardest skill you've actually acquired isn't clicking the buy or sell button, it's the pure discipline of sitting on your hands and doing absolutely nothing when your specific setup simply isn't there.
By month 18, you hit level 4. You are scaling up. You're now consistently managing a $12,000 account. A 7% return means you're generating $840 in a single month right from your apartment screen. At this point, your professional environment fundamentally shifts. You log out of that noisy, chaotic Discord server for good. Instead, you're in a small, tight-knit private group with peers. You guys are fiercely debating pure technical execution, sharing your trade journals, and actually admitting when you entered a trade 15 minutes too early. You start looking at scaling to 6 figures not as some wild fantasy, but as a pure technical and liquidity problem that you just have to solve.
All right, Phase 3, building the operational machine, encompassing levels 5 and 6. This is the massive professional leap where you stop just clicking buttons and you actually start managing outside capital.
With that leap comes some really intense personal sacrifice because you are now accountable to other people's money. You hit level 5, managing $80,000, taking on capital from partners who have been watching your track record for 4 months. To handle this kind of pressure, your entire physical life has to reorganize around the market. You're waking up well before the London Open. You give up alcohol entirely because, well, the empirical data shows it absolutely ruins your morning decision-making. You sleep exactly 8 hours a night because your trade quality tracker undeniably demands it. And crucially, you keep 3 solid months of living expenses in cash because you finally understand a core rule of this game. The market is for generating capital, never, ever for storing it.
By level 6, managing $400,000, all that individual chaos is replaced by a rigid operational machine. You're issuing formal monthly report templates, you are adhering to strict drawdown protocols, and you are maintaining regulatory compliance folders. You even have a part-time assistant now. And at this scale, usually somewhere around the $150,000 mark, the numbers have to fully dissociate in your mind. A $40,000 position cannot feel like 40,000 real dollars. If you actually felt the weight of those dollars, you literally couldn't function. You have to mentally convert them into mere percentage units of risk.
But you know, there is a very silent cost to this stage, and it's the loneliness of expertise. You don't talk about trading at dinner anymore because no one really has the context to understand it. Your friends just kind of stop asking. Mentally, you never really get a weekend off. A simple news event on a random Saturday instantly pulls your attention right back to your platform. You have maybe one friend at a fund who you can actually really talk to. With everyone else, you aren't conversing, you are simply translating your world. You aren't unhappy, not at all, but you are acutely aware of exactly what the work costs you.
Which brings us to our final phase. Phase 4, the Apex Manager Mindset, levels 7 and 8. The trader fades into the background, and the corporate business operator fully takes over.
At level 7, you are now managing $4.2 million. This capital is strictly institutional. We're talking family offices, high net worth individuals introduced through private bank relationships. And the craziest part of all of this, you actually stop placing most of the trades yourself. You hand direct execution over to a risk manager that you hired away from a prop firm. And let me tell you, that first month of stepping back from execution brings on a highly specific, intense anxiety of handing the wheel to someone else. It takes a solid 6 months to fully trust the system, moving from tick-by-tick panic to calm end-of-day reviews. Your day-to-day completely transforms. You now sit at the very top as the system architect. You're overseeing risk managers, developers who are building your proprietary order management software, junior analysts, operations managers, and investor relations. Your conversations aren't about candlestick patterns anymore. They are about system-level management, hiring, and analyzing Sharpe ratios, literally measuring your returns against the risk taken to get them. You are sitting down discussing drawdown duration and succession planning with very serious investors. You don't find alpha anymore. You architect the conditions under which alpha is generated. Finally, we reach level 8, the apex. You are managing $22 million. But honestly, you've stopped saying that number out loud because it doesn't mean what it used to. 22 million is simply infrastructure now. It's just the mass required to pay 7 salaries, cover massive compliance fees, pay for top-tier technology, and still produce a return that keeps your investors in the room. You eat lunch alone most days, and not out of sadness, but because the silence is highly productive. Although, sometimes, late at night when the office is totally empty, you might pull up a euro to US dollar chart, just to watch it. Just to remember what it felt like when it was only you, the price, and the pure possibility of it all. At this apex level, after 10,000 hours of live execution context, you have a completely evolved definition of the market. It is absolutely not a secret code to crack. It is a vast, continuous aggregate behavior of a massive crowd of participants. Your edge isn't knowing the definitive answer. It's simply knowing where the crowd is wrong, more often than you are wrong about them. It's a profound realization that entirely separates the amateur looking for absolute certainty from the architect managing probability.
Which brings us right back to where it all begins. Right now, in a forum somewhere on the internet, a brand new novice just posted a screenshot of a $340 demo profit with the caption, "This is it, I figured it out," and the fire emojis are just rolling in. They think it's simple. They are completely wrong, but they'll learn, and it will cost them exactly what it costs every single professional to learn it. So my question to you, as you look back at this incredible, brutal roadmap, where do you currently stand in this cycle?